All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Welcome back, traders, to our 10:30 a.m. update. Those of you who were banking on making money off the open long on Bank America better have second thoughts about that.
Yeah, Joel, actually, you were talking in the pre-market. You thought it might give it back, so kudos to you because it gave back the entire gain. This thing traded up to 944 in the pre-market, all the way back down. I thought 9 might give it some support. It did, and it's cut right through. Bounced off the 883. Now it's come back to that 9 level, and it's actually providing resistance again. So this 9 level has just been a resistance monster for this stock. You just blogged the piece. I wanted to talk about it, Joel. It's up there on our blog. You just blogged it. Street yearning for better earnings. And I think you've done a really good job with this piece, and you've made some pretty good points here. Is this market priced for perfection? Because we are getting some pretty decent results from a lot of companies, and they're selling them off. Like here, the Bank of America beats on, the bottom line number by a mile. The stock's up pre-market, trading up 5%, up at 944, and it doesn't even take an hour of the regular session. It gives back all those gains. I mean, it's not even the only one. Like, you talked in the piece about Google. Google had, pretty decent numbers. After hours, after they reported, they actually trade up to 670 they had traded up to that day. And then, obviously, the stock opened for the regular session, 947, slightly down, and went straight down to that 600 support area that we had been talking about. Now it's flirting with it again. I mean, Joel, I think you're right. I think this market on certain stocks here is priced for perfection.
Yeah, I mean, I think what the big factor is that you have some people with some monster profits off the October lows in this kind of run, and it doesn't look like anybody's biting on these earnings. There's not people or folks, institutions, traders or whatever, are, at least at this point, don't seem to be committing new cash to these equities based on these profit reports. And then naturally, when you don't have new buyers come in and sellers come in, you get these kind of sell-offs. So Dennis, it's hard to predict. I mean, the SPOOs are still under some major resistance, but they keep bouncing back, and we still got the big boy Apple and a few others coming out on the horizon. But just looking at the patterns of the earnings so far, it's just nothing seems to be good enough.
No, it doesn't seem to be good enough. But the SPOOs, surprisingly, you're right, Joel, have held up not bad. So the overall market has been holding up. But really, it's the companies that are reporting that is kind of concerning, because the companies that have reported okay numbers, but the stocks really have not performed that well. So that's what the overall concern is here. Like, I mean, even DuPont today, Joel, symbol DD, just bringing up the chart there. The earnings were pretty good. They looked pretty good. The stock actually opened a bit lower, but it was trading up in the pre-market, and then it did get a little bit of a pop there, but right off of the hop, but then it's given it all back there again. And American Express, after they reported last night, the same thing. It was actually trading higher. Like you were saying, it traded up, I think, into the 58.90 area off the initial report. So right around that 59 resistance that we had been talking about, but then sold straight off, trading after hours is trading down, and is following through today. This thing traded down to 57.13, Joel. It's bounced a bit now, but man, these numbers look okay, but the stocks just are not performing well.
If you think with these kind of numbers, Dennis, that we would just be marching up to new all-time highs.
Well, yeah, you'd think, because they're beating on the bottom lines, they're beating on the top lines for most of these companies, but the stocks aren't doing it. So I just get worried. We keep going through this earnings season. What's going to be, like you were saying, what's going to be the catalyst driving this market forward once we're out of earnings season, especially if they keep disappointing? I mean, not everybody's disappointed. You guys can come out and say, like, eBay, and eBay blew the numbers away, and there's a stock that's just off to the races. The stock's up 13% now, trading 40.71. So it's not, a perfect thing. There's not every single stock is selling off on their earnings reports, but more are selling off than are rallying. eBay's kind of the exception to the rule here. What a move for it, Joel, but breaking out now through over that 40 new 52-week highs. I mean, eBay is off to the races, but a lot of other stocks really aren't. And we do have Apple coming up here next week, so that should be interesting. Apple's obviously had a wild ride here for the last 3 or 4 trading sessions. What's your overall outlook on Apple, Joel?
I look for it to consolidate around this $600 level. 620 what it hit yesterday is what it broke down from, and now, we got under 600 today. I expect this consolidation just in the $600 level. I like to keep an eye on the 50% retracement of the high down to the low, and that was between, the 605 to 610 area. So I'm just looking for consolidation. I made some pretty good Apple calls over the last week or so. So I'm just gonna sit on my stool and wait a little bit on this one. But I don't know if this analogy is gonna make any sense. But this market's kind of like your beautiful ex girlfriend. She's gorgeous and she's great and everything. But she nags the hell out of you. It's so even though there's a lot of good things about her, she's just nagging your ass, and so you have to dump her. And that's
So are you saying we're gonna have to dump these stocks, Joel? Because they're
I don't
nagging us
know.
too
I hope
much?
my wife isn't listening. Well, she's not my ex-wife, so I don't have to worry about it. But it's just kind of the feeling that I'm getting, with this. It's just nothing's good enough for you already. But anyways, Dennis, I know you were looking at that pair in the EMC and the VMware. How'd that work out for you?
Well, we were talking in the pre-market, and I knew you'd get some pair traders underwater in this one. A lot of people like to trade EMC with VMware. VMware obviously spun off by EMC of quite a number of years ago, but they do track very well together. VMware came out last night with good numbers. EMC came out today with bad numbers. So off the hop, I was looking at it. I let it come in a little bit. I let VMware rally a little bit and EMC sell off a little bit. I was like, maybe I'll try a little bit of this pair. Man, that thing started going against me just further. The pair rallied a little bit. So VMware is basically going straight up. EMC is going straight down. Any pair trader that's in there is probably under serious water right now. So probably the path of least resistance is probably that pair is going to blow out farther. So I covered it for a small loss. I got under some serious water. It came back in, and I was able to get about 50% of my money back. So I decided I'm done with these pair trading on this one for today, anyways, because this one's not working. So you just got to be really aware. Like when it's not working for you, don't get stubborn. Don't put more on. You never want to add. I never add to losing positions because, like a lot of people say, average in. I just don't think that's the thing to do because that's how you really turn a small loser into a really big loser, and that's how you can lose your week or your month or even your year by adding to losers. So you never want to do that. You want to admit when you're wrong off the hop and basically try to cut those losers as best you can. Limit your losses. The game is to play with the house's money. I don't like playing with my own money. So when I start getting down a position, I'm getting itchy and I'm looking to get out. But when a position's working well for me, then I might hold on to it a little bit longer.
Yeah, Dennis, and just trying to tie in our theme to the Apple. I mean, if this pattern holds, which we've been talking about in the blog and everything, Apple's gonna beat the street. Obviously, with selling 84 zillion iPads, but they're gonna pound the stock. I mean that's been the pattern, and of course Apple can do what it wants to do, but that's the pattern we've been seeing. Let's just follow through on a couple other stocks that already released their earnings. IBM has sliced through that $200 level here. Yesterday's low did not hold, so you need to get that thing back above 202 before it can turn around. One that's still holding up pretty well is Intel, though, Dennis. We haven't been able to get to yesterday's low. Sellers stepped in under the $28 level, but that hasn't given it up yet.
Yeah, Intel's holding up okay, down 10 cents. IBM is a little bit concerning, though, because it did cut through that key 200 support area. It has bounced back up through that now, but I don't know. I don't think I'd want to be long the stock. Basically, we've been straight down here since we made that high going into the earnings report. Obviously, the really weak day yesterday, but following through here again today, not bouncing back off that 200 is not a great sign. So I think IBM could continue to drift lower here. And obviously, Intel is just kind of hanging out around this $28 level, Joel. Got up to $27.96 yesterday. Yesterday's high being $28.11. Until I can get above yesterday's high, I'd probably play this one from the short side too. So I'm kind of in agreement with you a little bit here. These earnings plays, definitely not liking what I'm seeing after the companies have reported for the most part, aside from an eBay type of play. But I don't know going forward here, Joel. If it's just surprising that the market is holding up though too. So obviously the market's still kind of thinking that maybe we're going to have some more good reports here and we're going to continue to move higher. But I don't know. Like the reports have been okay, but definitely the pricing action of the stocks after the reports has not been okay.
Right, and just from trying to put all this together, from a technical analysis basis, we love to do that. I mean, major resistance up at this 1390 level, 1388.75 was high from last week, and Tuesday's high we hit 1390 in the pre-market. I just kind of thought with the way some of these numbers are coming out, we'd be busting through that level and through the 1400 back up to 1419.75. That's not the case. We're still hugging this 1380 level. We'll probably hang out until we get the Apple report. Anything you'd like to add to our 10:30 a.m. update?
Obviously, you just want to be aware that GE, Honeywell, McDonald's, Schlumberger, Under Armour, all in the cards to report earnings there tomorrow. So you want to be aware of those companies reporting earnings, and keep in mind the stuff that we've said today. It seems like unless they really blow the numbers away like eBay did, that the pricing action in the stocks really hasn't been great after the reports. And that's all I've really got for you today. So we will be back with you tomorrow for our pre-market show.